Hello, everyone. It's Ryan Devon with the Devon team here at Keller Williams, and I am coming to you with what you need to know this week in Denver real estate. So, this is the first update for 2025. Can't believe that. So, we have a lot to cover. Let's go ahead and dive into the trends and the key insights from December of 2024 and now the start of 2025. So the detached single family market in December felt really like a pause before the anticipated spring resurgence. Inventory saw significant drops as many sellers really decided to hold off, waiting for that traditionally busier spring season. New listings, basically things coming to market, they slowed considerably during this time, while expired listings increased as homes failed to sell during this quieter time, or people just pulled them from the market again to wait for spring. So here is what we saw in the market then. So on the demand side, pending transactions softened compared to November, but interestingly, they actually outpaced this same period last year. Closed transactions remained steady month over month, and buyers really they had the advantage with more than half of all sales closing below the asking price. Additionally, nearly two-thirds of sellers offered some sort of concessions like covering buyer closing costs or paying to reduce interest rates. Pretty much across the board, two-thirds. So prices, they also remained stable during this time, avoiding the fluctuations that we saw in earlier 2024. Also, our days on market increased, giving buyers more time to make decisions. Showings during this time also dipped, reflecting again the seasonally quieter market conditions that we tend to see during this December into January transition. Now, shifting our focus to the attached single family market, that's condos, townhomes. The attached market, they followed very similar slower trends. Active inventory dropped significantly as fewer sellers ultimately listed their home during this time. Those who stayed in the market, they faced challenges really due to the reduced buyer activity. Not a lot of people out showing homes during the holidays. So key highlights from this. Both average and median prices declined compared to the previous month and year. Most sales did close below the asking price, with concessions even more prevalent than in the detached market. So again, a little more of that happening with condos and townhomes in terms of concessions. Other things are that homes that sold quickly generally did so right at the list price, underscoring the importance of strategic pricing. Don't overprice the home. You got to price it where it's going to sell. Also, in the attached market, showings decreased month over month, but they increased year over year. So days on market did stretch longer, giving buyers more flexibility in their decision-making process. So looking at the start of 2025, during the first week of January, our market activity began really on a slower note. Post-holiday dynamics really contribute to this, but there are some encouraging signals that we're seeing already in the market. So here are a few takeaways of what we're seeing right here at the beginning of January. So inventory levels continue to shrink week over week. However, on a brighter note, the inventory was significantly higher compared to this same time last year. Again, a little bit more to choose from. We've also seen a rise in what we call the coming soon listings, which is a hopeful sign for the months ahead for buyers that there's going to be more properties that are available. Pending transactions in the first week here of January, they surged week over week, indicating that buyers are starting to really re-engage with the market now that the holidays are over. That said, activity still did lag behind this same period in 2024, so a bit slower than we saw last year. The seller's odds right now of receiving an offer in the next 30 days improved compared to the previous week, but they still did remain lower than last year's levels. So again, conditions are still a little bit more challenging even for sellers. Our showings in this first week of January, they increased week over week, though days on market did continue to climb. Price reductions also, those decreased slightly, but over half of the homes that went under contract had taken a price cut at some point. So this is a clear reminder that strategic pricing really remains critical when you're putting a home on the market. So now let's address an important topic on everyone's mind: mortgage rates in 2025. I know it's what we're all thinking about. So our mortgage interest rates are heading towards that 8%. And here's what we predict for 2025. Unfortunately, as we start the year, we've seen significant pain in the bond market for mortgage-backed securities, paired with an increase in the 10-year Treasury yield. I know it's a lot there, but while rates are hovering just under 7% through the holidays, that's kind of where interest rates were for buying a home, we now expect them to settle firmly in the sevens and potentially move higher in the next month or two. We'll see. There's a lot of change that could happen, but it could happen. So ultimately, what's causing this? Well, the recent Bureau of Labor Statistics job reports showed that a decrease in the unemployment rate. It showed it decreasing from 4.2 to 4.1. So while more jobs in the economy may seem like really, really good news, it's actually pressuring mortgage rates upward, because the Federal Reserve is now less likely to implement rate cuts in early 2025. They might get pushed later in the year. Any anticipated cuts have likely been delayed right now, keeping rates elevated, at least for the time being. Again, it fluctuates. We could see things change, but that's just what the cards are showing right now. So additionally, upcoming economic reports in January really aren't expected to bring much relief on the inflation front. Inflation will likely remain somewhat steady, pushing the 10-year Treasury yield closer to 5%. Since mortgage rates typically trade about 2% above the 10-year Treasury yield, we could see rates firmly in the sevens or even approaching that 8% in the next month to month and a half. So let's keep an eye on that. In the longer term, as the economy absorbs the Federal Reserve's policies and inflationary pressures hopefully ease, we may see some improvement here. So by the latter part of 2025, there's potential for that 10-year Treasury yield to return to about 4%, bringing mortgage rates back down to the low to mid 6% range, while government interest rates, FHA, VA type loans, in the higher 5% range. However, again, this hinges on factors like rising unemployment and a broader economic slowdown, and the new administration changes that could come into play. So there's a lot of movement here. So what can we really do about rising interest rates? Really, education is key. So for real estate professionals like myself, it's like helping clients understand what their options are. So this could include rebalancing debts, considering rate buydowns through seller concessions, or planning strategic future moves to make those numbers work a little bit better. So even if now isn't the right time, we can identify what needs to happen in order to make a deal work down the road, right? You want to move in a year. Okay, what steps do we need to do now in order to set yourself up for that? So as we transition from December into 2025, Denver's real estate market presents really a unique mix of seasonal trends, economic pressures, but also opportunities right now. Buyers currently do hold the upper hand with more inventory on the market than we've seen in a while, extended decision-making time, and negotiating leverage. Sellers, meanwhile, can prepare for what promises to be a more active spring market. And we're starting to already see that, which is great for you sellers out there. So if you're planning to buy or to sell, now really is the perfect time to strategize. So I'm here to help answer any real estate questions that you might have, whether they're serious or you just want to joke about the craziness out there. I'm here to do it. So together we can ultimately navigate this ever-evolving market. And that is my update for you here to start out 2025. So I know I threw a lot at you, but I hope that this is helpful as you're planning any moves within your real estate world in the next year. And if you want to get really specific on your unique situation, the home you own or the home that you want to own, I'd love to have an opportunity to sit down with you and strategically plan your year. Please feel free to forward this information to anyone that you know. And again, if you know of anyone who's looking to make a move to buy, sell, or invest in real estate this year, I would be honored with an introduction. That's it for me. Again, my name is Ryan Devon with the Devon team here at Keller Williams. I hope you have a wonderful and a blessed day. Take care. Bye-bye.